Yo, yo, yo. G'day, mate. How are ya? How's your mum? Good morning, good morning, good morning. All right, hey, let's get going. Welcome to Forex.Today, the YouTube community of more than 20,000 foreign exchange traders. We gather here today to conduct technical and fundamental analysis with the overriding goal of planning our trades in advance. Why? Well, let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results. Please stay small, stay humble, focus on the long term, never risk money you cannot afford to lose. My name is Wayne McDonald. I'm the Chief Executive of the International Association of Former Male Supermodels. You're welcome to join if you'd like. Now that I'm retired from the runway, what I like to do is focus on Forex. Yeah. So again, we'll talk about technical and fundamental analysis today. We'll go through the stock markets. We'll go through gold, oil, and Bitcoin. We will look at dollar pairs and yen pairs, or really whatever you want. Whatever you want. Economics, macroeconomics, fair game, central banking, monetary policy, international political economics, game theory. Hey, man. Just ask. Let me know how I can help. If you look at the description below the video, you will see, well, the opportunity to click the thumbs up button. You could also subscribe if you're not a subscriber, so you can be alerted to my webinars. There's a link to fxbootcamp.com. It's a community that I've been running for about 20 years. I think more like 19 years. And it will help you. I promise you that. Okay? I promise you that. I'm certain you can go somewhere else and pay $300, $500, $800, whatever for their training course. You will learn more about trading from my $88 courses than all of that. And that's the whole point. That's the whole purpose. So I hope you join. There's a link to my book, the strategic and fundamental, strategic and tactical Forex trading. I'd like you to leave a review, actually, if that's okay. Would you do that? Has anyone here left a review? Let me pull that up. Actually, let's take a look. I'll do that in a second. Let me bring it up. I know you can't see, but yeah. If you want to buy it used, buy it used. Okay? Don't worry, I don't make any money on it. Actually, technically, if you buy the brand new one, I make $5. I haven't even cashed the checks, I think. So anyways, go ahead and buy the book. Anyways, and then what? You're going to need a broker. I believe Trader's Way to be the right broker for you. I believe them to be trustworthy and ethical. I know they listen to clients. We had somebody ping support just a week or two ago about concerns that they had, and the concerns were immediately addressed. And I was CC'd on the whole thing, and I'm like, damn. So world-class customer service, fast execution speed, huge swaps on many things. Not everything, but many things. And but the bottom line is I trust them. And as a service provider to your small business, your small trading business, you need a service provider that you trust. Pretty simple. I mean, you got to have the prereqs, if you will. They have all of those. They're good. It's great. They have the right tools. They're fast. They're affordable. But ultimately, after all that, you need somebody you trust, and they earn my loyalty and respect, so I recommend them. Check them out, tradersway.com. Beep, beep, beep. And I did pull up the book. And let's look at 133 ratings. Cool. Let's do most recent. January 21st. Cool. That was 3 days ago. Cool. Thank you, Mike. That was January 8th. Thank you, Richard. December 20th. Thank you, Bronco Driver. No, not Bronco. Broco Driver. Appreciate that. There's Denise. Oh, look at Denise. November 15th. Cool. Thank you, everybody. Appreciate that. A few more would be appreciated. All right, let's take a look at the calendar. We have some news today. It's not huge news. I can drop into low, throw it down there. It's Monday. We have Richmond Fed. There's something else too. What was it today? There's something else besides Richmond Fed. Is it preliminary PMIs or something? It's not even on this list. So it's news. It's thin news, but hey, if you want to pay attention to Richmond Fed, that's today. I think more importantly is API. And for everyone that has taken the oil trading course at FX Bootcamp, which some people paid hundreds of dollars for, and now it's included at no additional cost in your $88 a year membership. Pablo says, can you give me a link to that? No, in fact, I'm going to take it down today. So no, it's over, Don. I was supposed to remind myself around this time to take it down. So, yeah. EJ says, your book has everything if only readers can spot the gold in it. Hey, would you leave a review that says that? Neri says, I just started the oil training. And I bet you anything, it's more in depth than you figured it would be. It's dang near, college level training, I think. Like, I really enjoyed doing it. Okay, anyways, then today in the Asian session, we got a lot going on. Kiwi inflation, Aussie inflation. Yeah. So remember, this is interesting. Okay, this is all interesting because this is going to impact what they do. Okay, they, meaning the central bank, sorry. See, I can't think and talk at the same time. And then reaching out to tomorrow out of the UK, PPI. I don't know if that's a big deal. I guess it's a big deal because it's sort of a leading indicator towards CPI. Okay, Swiss Zoo. German IFO, whatever, Italian, the balance, whatever. Okay, Bank of Canada monetary policy report and interest rate decision. So what do you think? Should we care? Yep. So that's a big thing tomorrow. Okay. So we'll leave it at that. We'll leave it at that for now. So, yeah, Bank of Canada, huh? Bank of Canada. Bank du Canada. Oh my God, I'd love to put a little bubble above her head. Like, what is she thinking? That's such a funny picture. I can't help but like think of 15 different jokes. Thank you, Anthony. So EJ, are you following? Well, let me ask you this, EJ. When do we expect a possible? Well, how about this? An announcement. What day do we expect an announcement on yield curve control by the Bank of Japan? Meanwhile, look at this. It's just me showing you. This is the kind of work you need to do. Business Outlook Survey, fourth quarter. That's interesting. Okay, I'd read that if I were me. EJ? Okay, that's definitely a read. Yeah, so that's what I figured, EJ. So you are missing a massive component to what's going on the Japanese yen. So if you feel like you're getting blindsided, it's because you're you're trading partially blind. So yeah, makes sense to me. So yes, the Bank of Japan is making interest rate decisions. That's important. Yes, you're dealing with seasonality. That is important. But also potential changes in yield curve control. But it's according to their own website, it's the last day of the month. So let me show you that. I mean, dude, you just need to know this stuff. Okay? You need to know this stuff. That's all. Monetary minutes of the monetary meeting. No. Is it this one? No. Is it in the meeting? No, we didn't go through that level. Maybe we did. Yeah, I think we did. Hang on. Well, I can't go. I don't have time to go through it now. But anyways, yeah, I mean, it's something that we've covered in one of the, I guess probably the swing trading group. But it said somewhere that on the last day of January. She says we had YCC on the 20th. Yeah, December 20th. Okay. But in one of these reports, they said the last day of January. They didn't say the date. They said the last day of January. I thought it was there. Maybe it was further back. Look at this. It keeps dumping me out. Maybe it was this one. Yeah, I think it was this one. Yeah, I guess I'm doing it too quickly. It's in here. I think it's in this one somewhere. I just don't see it. See, I think I'm reading it or I'm looking for the wrong words. I'm not actually reading it, which is probably the problem. Well, anyways, like I didn't have time to prep for your question, obviously. So that's it. You just have to know. Okay. It says January 30th. Okay, thank you, Ashish. I appreciate that. Okay. Yeah, we definitely have covered this weeks and weeks and weeks ago. Like it's old news, EJ. Old news, Bubba. So, anyways. So let us go through the stock market and then we'll do some commodities. Hua? Okay. I'm in a losing trade here right now. Resistance is holding. I can move my stop here. Okay. Just so you can see it. Okay. And we've made a higher high. So I'm not happy with the situation that we're in. Okay. Now, remember what I was trying to do in my failed trade plan, okay, was this to this to this. And it wasn't me just responding to the giant bearish move, but more like we had anticipated that giant bearish move well in advance, weeks ago. So I'm like, okay, that's about the right price and about the right time. Everything seemed about golden, and I got the move, and then I waited for the lower high, sold the lower high, and it didn't work out. Oh, yeah, thank you, Thiago. That was the other thing, so thank you for bringing that up. Yeah, I've been waiting for this Microsoft report, too. Well, do you know what time it comes out, Thiago? Oh, and by the way, EJ, join FX Bootcamp. The training courses are great, but they won't cover yield curve control. But we've covered that subject matter in the day trading group and in the swing trading group at length. So as you can see, we're talking about specific dates. Okay, so pay the money. Join. Get knowledgeable. All right. So, yeah, after the market closes. Okay. All right. So one of those patient days. So anyways, I had my stop above R. Okay. So one thing you might want to think, like, how did I shape this trade? I was thinking this was an M3 position trade. So this is an M3. So when I sell at an M3, where do I put my stop? Anybody remember? EJ's taking the course? Right on. Well, you can see it there as R1, but the answer, truly, the basic simple answer is above resistance. Okay? Now, if I was a bull and I bought here, and that is a buy zone, so I would be thinking this, and your stop goes below support. Well, where's support? Well, this, okay? What is this? That's not support. That's M2. Support is down here. Okay? And now that it's made a higher high, you can jam your stop just below that support. See, the first support here, that is market support. This support here is price support. Okay. So anyway, so what I've done here is I tried for this. I sold a 382 Fibonacci retracement, stop above R1, and praying never hurts. And remember, I'm not trading that purely technically. My plan was to sell this before I even had that opportunity. So I really believe this is going to go down. I really do. And right now, technically, it looks very bullish again. So I'm probably going to end up taking a loss on this, technically, because what this chart says is this. Thing is, I look at it and I'm like, I don't think that's going to happen. And that's, I don't know if that's my problem or not, but I just don't, I'm just not there, man. I'm just not there. So I won't be a market participant doing that. I just don't think that's going to happen. So the trick is lose as little money as possible when you're wrong. So I'm now, so, you know, again, if this had worked this way, we would have had a 21.55 cross down. But because it popped back up, the 21 is back above the 55. And really, I took a little bit of a risky trade by selling it a bit early. And, you know, I guess it caught me. But if I was making money right now, I would have felt it like it was a perfect trade. So, whatever, huh? What if? Let's take a look at Europe. Europe is settling down. Today is a key day. If you believe this is going to start trending down, that's the channel you probably want to trade if you're a bear. Okay, bears, you want to keep this a lower high. You don't really want a double top. You certainly don't want a higher high. Richard says, when Philly Fed index comes out, the market will start to correct. Yeah, maybe. Philly Fed is really not that big of a deal, but it's the beginning of something, right? That's right, Mubarak. And so Mubarak's saying that there's a pivot is the language they're using now, priced in. And, you know, I look at the data, not the headline data, but I look at the subcomponent data, theoretically like a Fed would do. And I don't see a pivot. But that's where I'm probably wrong. If I'm wrong, and right now, technically, that's what it looks like, it's because I don't anticipate a pivot down to 25 basis point rate hikes. I just don't see it. I'm not there. So if they do it, that's where I was wrong and the rest of the market was right. And again, you're going to be wrong a lot. It doesn't mean you're a bad person or a bad trader. You're a bad person or a bad trader if you lose a lot of money. So in this case, if I'm really, really wrong in my analysis, or let's say not my analysis, because my analysis is correct, my interpretation of the data might be wrong. My interpretation of how the Fed would react to this data might be wrong. So if I lose a little bit of money, hey man, it's normal. If I lose a lot of money, F you, you're fired. Do you understand? You can be as wrong as you want to be. You're just not allowed to lose a lot of money. This game is about survival. So when you're wrong, you lose a little bit of money. And when you're right, you make a little bit of money. Hopefully you're right more than you're wrong. But even that's not even that necessary. Right? But anyways, that's where it'd be wrong. If I'm right, then guess what? According to our research, we know there's a lot of people that have priced in a Fed cut. They're wrong. That means the dollar is undervalued. So if I'm right and the Fed raises by 50 basis points, I would assume, anticipate, guess that the dollar will get strong. Cool. Well, that's the camp I'm in. And therefore, I get to engage. Right now, I'm not really engaging. I'm sort of like the T-Rex testing the fence. Yes, that's Jurassic Park. You'll have to Google it. Okay. Cool. So anyways, if that rolls over, you might have permission to engage. Yeah. Well, that would be a turning point, right, Richard? So we'll have to see. That Fed meeting's important. Cool. And I hope you learn patience and discipline. All right, so let's do this. Let's roll this over to commodities. Okay. So this came up just enough, I think, to hit my stop loss. You're kidding me, huh? Came up and did a 786. I had this set up as a breakout trade. Okay. Top of the mark. Lower low outside of the range. That sets up a breakout trade. And the idea is somewhere between here and here, you would get a continuation down. So the trade plan would look like this. And I did sell around the 382, I believe, and I did have a stop around 786, and I think this came back just enough to knock me out for a loss. Gold! Dang it! But anyways, there's your silver. So we'll see. This moving down is risk off. Okay. Are we triple topping? Wowzer. We've been at 82 for a long time. And you're like, Wayne, just this week. No, and last week. And the top of December. So what we had talked about earlier in the week, and I think might have just been yesterday, I said, look, if you're selling this, the best you can expect for yesterday was down into the 21. So it came down to the 21, popped straight back up, and now is trying to move back down. Smells like consolidation to me. But, hey, man, you can have it. Do what you want with it. Be interesting if it did drop a little bit lower and start working around. Okay. Now, remember, I'm long-term bullish on, really a lot of different things, all commodities and all forms of energy, just not now. It doesn't make sense in a period of global economic contraction, of economic activity contraction, or contraction of global economic activity. So it's a timing issue on the short run. But let me know of your thoughts of me starting a fund called the Basic Needs Fund, Human Basic Needs Fund. I'm thinking about directing capital, financial capital, towards better things than Facebook and Peloton and Netflix. I'd like to start championing a cause or revolution where we direct our financial capital towards basic human needs. One of them is energy. Another one is food. Another one is clean water. I think that's where a lot of clean energy, not just ESG or whatever, but energy, but even cleaner energy, whether it's new forms of drilling, new forms of energy where you drill and you pull heat out of the ground, not just hydrocarbons. I'm interested in that, in the drilling technology. I'm interested in water. I think all of that's going to be important. I'm interested in copper and rare earth minerals and clean coal. Okay. So anyways, I'd like to direct some capital there, and all this esoteric investing that we've been doing the last 25 years have led us to a place where we're short on the basic needs and we're long on all the crap we don't need. Corn is not the best energy. It's a form of energy. It requires a lot of human capital. It requires a lot of fertilizer. But, I don't know. There's lots of better ways than corn, but corn is one way. Okay. Anyways, cool. So my WTI is at a key price here. And all I'd like to remind you is this chart says up. But when I look at how much energy we have in storage, we have enough. We're not in a critical shortage anymore. We were a long time ago. Now we're okay. This does not have to go up now, although seasonality says it can start, okay, and then take a break and then start again, all that kind of stuff. Edward Hicks says geothermal and magnetics. I do, yeah. So like you're talking about magnetic pulse for drilling through hot rock. And yes, yeah. That is something that I'm interested in. I think it's really, really interesting. But I don't know, like if I was running a fund, if I was a fund manager, I wouldn't invest like in that kind of stuff, which is basically venture capital type investments. No, I would want to like buy stock and own miners. Like just I want to direct capital towards people that are producing, let's say, copper and cobalt now. And energy, even if it's coal. I don't care. I didn't say I was ESG, but I want to help people dig in the ground and get the stuff out that we need now. Okay. So nuclear fission, yeah. That's great. I'll leave that to other investing. But fusion is fine. So you could invest in a Bechtel who would build nuclear power plants here in the United States. But they do such a crappy job, you can't get anything done in the United States. It's horrible. It takes 10 years to build a nuclear power plant, and it's probably 500% over budget. I mean, it's just a disaster, but the Russians and the Chinese can build nuclear power plants, no problem. The South Koreans are really good, so we probably should just stop hiring American companies and just allow South Koreans to build our nuclear power plants in the United States. So, but I don't want to focus on that because you're sort of one and done. You build a nuclear power plant, then you go into the next project. I don't want to invest in that. I'll let someone else invest in that. But I'm interested in all kinds of things like the fuel. And in particular, the enrichment of the fuel. And I've already identified this, so I don't need to go into it. But there's some very specific companies doing very specific things that I think are going to be very much required over the next 25 or 30 years. And so I'd invest there. But the idea is, yeah, nuclear power. Sure. Basic human needs. Yeah. So anyways, yeah. All right. So silver, I got partially right. My timing was off. All right. Gold on the 4 hour, WTI on a 4 hour looks like it's setting up the way I want it to set up. But it's too early for me to trade it. It's unfortunate. It's just, I started out the month really good, then I've given it back. So now I can't afford to take the risk and all that kind of stuff. So I just have to be now extra patient. It's okay. Okay. Don't get upset. It's okay. Gold's still moving forward. Okay. Just moving forward. Okay, I'll stay, I guess, on the 4 hours. Just still seems to be the best chart. And it's still just climbing along. So if you're a bull, you're doing really well. The trades are great. Up, down, buy at the moving averages. 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 But here's the thing. I'm not a bull, so I kind of let it go for now. And I'm very interested in if. Okay, remember, think of it as an if-then statement. If this turns bearish, definition of lower highs and lower lows for bearishness, at $1,946.70 in that area. If it starts doing that, I'm going to engage. It's if I didn't say when it gets to 46, right? $1,947, sell it. No. If it reverses there, then I have permission to engage to the downside. Sure know what I'm talking about? Alone, alone. Got all these wonderful stock markets available for trading. You ever want me to cover one of these, like the Dow instead? I don't really care, but if you want me to cover the CAC or something, you let me know. Just looking at these things. What is all this? Uniswap. Doge. Yeah, I heard my Shiba Inu is up. Is that right? Anybody tracking Shiba Inu? Palladium, interesting. Monero. I wonder why this stuff gets mixed up there. Cool. Anyways, just looking. Just looking. All right. So anyways, there's some of the stock market indices. There's some which we've covered. Then we kind of looked at WTI stuck at resistance. Looking at silver, maybe a breakout to the downside, but we don't see something similar at gold. But 1946 could be, or 1947 could be the top of the year. Not that it will be. It could be. It could be. That's what the chart says. So I'd love to have it roll over and sell it for a year, maybe. We'll find out. So cool. Getting it interesting, but not ready yet. So let's do the dollar pairs next, huh? Cameco is doing great. Really? I missed it. Huh? I missed it. I want to buy it, Pete, on the way down. Cameco, huh? I'll tell you, my best performing stock that I bought in the last year is the prison stock, and it's up 60% since I bought it this year. And the mining companies that I bought, 3 months ago, they're up. One is up 26%, and the other one is up 36%. Plus, I'm collecting 10% a year on top of that. Booyah! Yeah, Peter's like, I became greedy. I still expect downward pressure. So, yeah, I hope not. I even have the cash to buy it. I moved some stuff around to buy it. So I got the cash. Anywho, first mover maybe. Take a look at PIG. Okay, potential head and shoulders type play going on here. Okay. So if you're a bear, can you sell it here? By the way, Peter mentions Cameco. The reason I wanted to buy it is it's the one company in the West that converts the first level enriched uranium into a gas. And there's a gasification process that then removes some of the, I think, lower graded or radioactive material from the higher graded radioactive material to then get it enriched to the point where it could then be turned from, so then they separate the gases. Just imagine a heater treater, right? So they siphon off what they don't want, and then now they have something more pure, and then they can convert that into a solid again, and that it can be used as fuel for generating electricity in a nuclear power plant. And so that process gets done by this one company. I mean, if you think about how many uranium miners there are, okay, or how many nuclear utilities there are, when you go through the supply chain, there's a lot of different people doing a lot of different things. But when it comes down to basically one company being a critical part of the supply chain, oh, well, I want to buy that one company. The guy in the middle. So anyways. All right, so you can't sell low. So this is what you could do. Okay. Now that's what I did the other day in the S&P 500, and it didn't work. We're up here now if this was the S&P 500, and I'm hanging on by a thread. But anyways, this says down if you're a bear. You can engage if you want to. I would anticipate a lower high if I were me. It could be this week, it could be next week, but if you're a bear, you can only sell high at resistance. So you should be setting up a trade for later today or tomorrow. And that's what I teach at FX Bootcamp. If you're chasing this red candle, you're not adding any value to the market. And you're not going to earn very much because you're not creating any value. Okay? The value was anticipating this. And now the value is anticipating this. Okay? Meaning up, 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 okay? Triple top, boom. So you should, if you were a bear and you sold up here, basically today's day trade, guess what's happening? This is the sell zone for today if you were a bear. So if you're like, I'm taking a daily sell zone on a weekly sell zone on a triple top. You understand? This is a weekly swing and a day trade. It's a swing and a day trade combo. Guess what this is? The profit target for today. So there's some knucklehead logging into New York, looking around, and he says, "What's up, fellas?" And he looks at his chart and he says, "Oh, I guess we're selling pound dollar." Sell. But this is where day traders are taking profit. Probably, maybe it works out, but probably not is how I would read this chart. The probability of this falling further, I don't think is likely the way I'm looking at my technical tools. So if you're going to be a bear, I think you might want to try one of these things. Okay. You know what I'm talking about? Yeah, boy. Huh? That's how you do it. Okay. See, if the Aussie dollar is going to roll over, then it's going to do it at the price we're at now. Okay. So you could say it's going to do that. Now, the conservative trader wants the lower low, lower high, and would probably take this next week. But you don't have to be conservative. That's not always the right way. A bear has two choices: sell the lower high or sell the double top. So you could say, this is going to double top. You might say, because of the respect of this price, there's just no doubt it's going to happen. Cool. So that's your strategy. You understand? Strategy. If you just trade that because it's a double top, you're betting and guessing. Oh, double top, that's a reversal pattern. Sell. No, dude, come on. Smarten up. Why'd you tell it? Why'd you sell it? I don't know. This is a double top. Dude, come on. So, first of all, I think you should have a fundamental reason why to be buying or selling this, but whatever. Let's say now you're engaged and you say, okay, my strategy is take this down. So today's day trade, for example, the target is here, and then it's going to come up, and then it's going to go down. So there's your two days worth of trading. You got all that planned out. Now you can drop into an hour or a 15 and put that plan to work. So what do you have here? Lower low. Okay. And now you're engaging using price action. Double top, lower low, lower high, lower low, lower high, lower low. And that's your game for the next 2 days. Or until it stops working. Because it could always do this. Double top, lower low, lower high, lower low, higher high. Oh, what? Okay. Did you guys click the like button? No. Cameco. Whoa. Well, it was 22. I think it was 22 when I started talking about it. So now it's 27. Yeah, I guess $5 on 22 is pretty good. Is that the right company? Cameco Corporation is the world's largest. Well, it's gone. I got something that's installed on my Google browser. It does weird things now. I gotta clean my machine. It's weird, huh? See how it just went away? I saw it for a second, then it went away. Just wanted to explain. So much easier to find this in my investing account. I can just pull up basic. I mean, this doesn't tell you anything unless you already know what you're looking at. So anyway, so $27, huh? A little bit of red on the screen for now. I wouldn't make a big deal out of it. 3.52. That's interesting because yields are climbing. But I guess we should probably wrap up. You know, S&P 500 not really falling. So, again, another day is going to be important. Crude right at resistance, Aussie dollar right at resistance. Things can turn around if you want to. So, like I said, if you're a bear on this, your day trading should just lead you on these smaller time frames, because you're on the higher time frames, you got this planned out for a while. So maybe this is what you're doing the next couple of days. That's how I would do it if I were me. Okay? Is you look at the higher time frames first and you ask yourself, what do you think it's probably going to do? We call that strategy. And around the strategy, you then deploy tactics. And so what I've been saying for quite some time is, I think it should be going this way, and this is the price in which it would do it. So now that we're at that price and we have a double top and a lower low, then you can sell lower highs and anticipate a lower low, and then anticipate a lower high, which would then anticipate a lower low. And that's your trading, huh? Okay. So thank you for being part of our YouTube community. I invite you to join fxbootcamp.com. It's not very expensive. In fact, it's dirt cheap, and you will get a lot out of it. A lot. It's worth at least 10 times the price. At least 10 times the price. So come on, man. Get involved. Peace on earth. May the pips be with you. May our profits be above average. Remember, today, all members of FX Bootcamp in the day trading group, I should say not all members of the day trading group and all members of the swing trading group, you guys have an opportunity to meet at the Stop, Look, and Correct session today. It's Tuesday, right? It is, right? I think it is. Yes. So this is where you get feedback. Impressive feedback. Ways to really sharpen your saw. Okay. What about CPI coming from Australia? Yeah, well, if you're tracking inflation, you need to have that, Richard. See, Richard, you have to understand, I'm a macroeconomist. I don't really care about news. It's just another data point that goes into my data set. But should I trade Aussie CPI so I can scalp it? No, I don't really do that anymore. I used to. But if it pops 50 pips, I don't really care. Okay? It's just not worth my time. 50 pips is not a lot. But what I'm trying to do is understand the policy of the central bank and be in trades for long periods of time, right? So I'm yeah, it's interesting. And of course, it'll move the market for a bit. And if you get to trade Asia or if you trade pre-London, yeah, it's all good. But we already know what's going on at the central bank. We already have some basic assumptions, and it's not likely to be radically different than the stuff that we already know. So yeah, you'll probably get a little bit of volatility. Maybe it pops 30 pips, 40 pips, and then it'll come back. And, 8 hours after it happens, I'll log in to do my trading, and it'll just be back to where it kind of was or what it was already doing anyways. You see what I mean? So I'm not really there to catch the volatility. As a trader and investor, I'm trying to reduce volatility. So I've certainly in my day scalped the news. You know what I mean? And picked up some quick, easy pips. But yeah, I don't think I'm going to show up for that. Maybe Aussie jobs report, that kind of stuff. Aussie interest rate decisions. Okay. Yeah. But CPI, yeah, it's just another data point in the data set. It's going to be about what it has been. And that's that. So that's how I look at it as a macroeconomist. The news is not fundamental. The news is a release of a new data set. Analysis of the trend in data sets, the aggregate, the trend in the aggregate CPI over periods of time can get me lots of details. But even then, all I'm trying to do is filter all of that with how does the RBA feel about the trend in inflation? How does this impact their current policy? And will it get them to change their currency policy? Will it make them raise interest rates to slow CPI? Or will they lower interest rates to increase CPI? Well, that last data point is fundamental analysis. Okay? So I'm not going to lose sleep over Aussie CPI, but it is tradable. Oh, yeah. Anyways, peace on earth. May the pips be with you. May our profits be above average. Cheers.